Most of the price action on Wednesday was nothing more than an extension of the recent moves we've been seeing, with little in the way of any specific fundamental catalysts on the day other than end-of-month flow. This resulted in more US dollar strength, though the moves weren't all that intense. The pound was the one exception, relatively underperforming on the back of more Brexit bumpy comments from EU Barnier, with the official warning this time that a transition deal period for the UK was not guaranteed. We also saw more tension in Theresa May's cabinet and some unsettling headlines relating to two large UK retailers. The euro didn't drop all that much on the day, but this didn't stop the single currency from taking out a key technical level against the US dollar at 122, which could open the door for a drop towards the 2018 low around 119.15 in the sessions ahead. The technicals are also warning of a more downside in the cable rate, with the market seen gravitating back to some rising channel support on the weekly chart in the 135 area before it then considers that next higher low and a bullish trend continuation. Interestingly, the yen was an outperformer, with the gains there attributed to some end-of-month risk-off flow. Finally, the Canadian dollar continued with its slide as the weight of NAFTA risk continued to hang over the loonie's head. Looking ahead, we get some manufacturing data out of Germany, the Eurozone, UK, and US on Thursday, along with some other releases, but the big focus will be on the second round of Fed Chair Powell's testimony, this time in front of the Senate Banking Committee, and the release of US core PCE, an indicator that could have a material impact on the market if it comes in above forecast. It would be wishful thinking, but if the core PCE print did come in hot, we would love to see this brought up in the form of a question to the Fed chair, given how sensitive markets are to US inflation indicators right now. If that data comes in hot, look out for more dollar demand and a bigger drop in stocks, with the equity market perhaps thinking about getting back to that intense selling we had seen earlier this year. That's all for now.